Friday, June 7th, 2019, Monaco 64, home of alternative economics and contrarian views. This morning I want to talk about negative interest rates and how it's tempting to borrow on negative interest rates. Basically, the lender is paying you to borrow, the interest at least. But I want to talk about the other side of the coin, that they're actually paying you to indebt yourself even more in an environment that is very difficult to pay back the principal. And why am I talking about this today? Well, I saw an interesting article on Silver Doctors by Simon Black, who is an interesting author. And it says, European bank just offered me a negative interest rate to borrow money. So that's what I'm going to talk about today first. Then I'm going to look at what the markets are doing and talk a little bit about today's jobs data from the US, the non-farm payroll, which is, of course, a hypothetical number. It's a manufactured number by the government and the Bureau of Labor Statistics. There's the old saying from Benjamin Disraeli, there are lies, them lies, and then there are statistics, right? So let's start out with Simon Black. So let's read the article here. It says, this is Simon Black. Yesterday I called my bank in Denmark, Nordea. And by the way, I actually did deal for that bank when I was a futures broker in the city, Nordea. And couldn't believe what they told me. They offered to lend me money at minus 0.12% for a 10-year mortgage. So basically what this means, if you borrowed $100,000, you'd be getting $10 a month in positive interest, actually. It's like you were putting money in the bank. But so that's what it is. In other words, the bank would pay me to take out a loan. Of course, as a Sovereign Man editor, I've written a lot about negative interest rates, but most of these cases were always reserved for big banks or institutions. That no longer seems to be the case. Now, negative interest rates are the norm. Thousands, if not tens of thousands of Danes will go out and take out mortgages that will pay them every month. And he goes on to say, this is completely mind-boggling to me, but it just highlights how broken the financial system really is. Well, I was talking to my wife about this yesterday, and she thought she couldn't get her head around it. And then we're, trying to figure out, why would the bank pay you? The thing is that in Denmark, if you look at their central bank, their deposit rate is minus 0.65. So for banks, it doesn't really matter if they pay you to lend money, as long as they get paid a bit more than you. So they make the spread, and that's how it works. So the Nordea will be paid to borrow a little more by the Danish central bank, and that's how it works for them. But what Mr. Black didn't touch upon, and I think is very important as well, is that it's very dangerous for the borrower. I know they're getting this pay to borrow, but the other side of the coin, as I said, is that they're taking on a huge a debt at a period of deflation of interest rates. And what does that mean? Well, we know that when yields fall, bond prices go up, right? So the value of the debt goes up. So, and the more it gets closer to zero, those prices go up even more. It's called convexity. So on a 10-year loan or mortgage, if rates start getting even more negative, that price of that loan, the value of that debt is going to go up even more. And we all know that in a deflationary environment, the economy is not doing well. House prices are not going to really go up like during this, an inflationary period. So yeah, I would rather borrow really at higher rates when we know that the value of the money is going to go down. But in a deflationary environment, I think it's very dangerous. So that's the other side of the coin. But that's how they make the money. So Mr. Black said that it's mind-boggling, but it isn't really mind-boggling. If a bank can borrow at minus 50 basis points and lend at minus 12, they're still making the spread. I remember when I was a futures and options broker, there are strategies and options like 1x3s or 1x4s where the price of the strategy becomes negative. You're actually getting paid to put the strategy on. But, the other side of the trade, the market maker, he's getting paid a little more. So, yeah, it's not mind-boggling to me, and that's how it works. But I would say to all the Danes out there, and I know I have some viewers from Denmark, that, yeah, don't be fooled by this, because you might be getting paid the interest every month or every year, but the principal is going to be very, very hard to pay off. What they're doing here, it's yeah, they're paying you to borrow money, but they're paying you to become an even bigger debt slave, in my opinion. So be careful. And I think it's going to get worse in terms of negative interest rates, because we're seeing that there's a lot of talk about that now. So what about the markets? Yeah, it's 7:33 a.m. London. Markets yesterday again went up. The stock markets, gold and silver traded fairly well. We went back up to around 1340 in gold, just below 15 in silver. Right now we're actually coming off. Spot gold is down just under $5 at 1330.40. The range has been 1336, 1330. Yeah, gold and silver, especially gold, they have come up very quickly and sharply. So these intraday corrections are normal. Silver, 1485, down 3. Range has been 1493 to 1484. The Dow future is up 43, 25,766. The S&P is up 4, 2848. So they're both up about 0.15%. The NASDAQ 100 futures up 5 at 7281, up only 0.07%. The pound is unchanged, 126.95. Euros at 112.60, down about 0.13%. And the dollar is up slightly against the yen, 108.47. Dollar is up also 0.2% against the yuan at 6.94. WTI is up 1.25%, 53.33. Brent is up also 1.3% at 62.16. Bond market, 10-year yield is at 2.12, unchanged from yesterday. The 1-month T-bill yield is at 2.32. So 20 basis point inversion there. So today we've got non-farm payroll, or the U.S. jobs data. We saw earlier this week, or was it last week? Yeah, I think it was earlier this week, ADP, which is a private sector survey of employment. That was very low, a lot lower than expected. But expectation today is a rise of 185,000 new jobs, non-farm payroll. The unemployment rate is expected to remain at 3.6%. So that in and of itself, and the fact that we're hearing a lot of central bankers, Fed bankers, Bullard, Powell, talk about rate cuts, about maybe unconventional policies like QE. The fact that they're doing that, I mean, if I went back to someone, time travel back to the mid-90s and told someone the unemployment rate is at 3.6%, non-farm payroll rose 185,000, they would say, wow, the economy is doing really well. The 10-year yield must be at 6 or 7%. No, I would say, no, it's dropped to almost 2% now. And the Fed's talking about cutting rates. They would be like, what? And if you told them, that the Dow was almost at 30,000, they'd be saying, what the hell's going on? They're crazy. And that's why this is not normal, folks. So we'll have to see what happens to these numbers. Being cynical, I guess, a bit, having some cynicism, I would even say that these numbers could be doctored down and the unemployment rate doctored up in order to maybe convince the markets that the Fed will cut. I mean, if we get a number at 3.2% unemployment and non-farm payroll rising by 300,000, how can the Fed talk about cutting rates or doing QE? This just goes to show how crazy this system is. So today as well is the last day for Theresa May as Prime Minister. I think she steps down today. So who's going to become Prime Minister in the UK? And when will the next Prime Minister take over? Well, from what I read, the Conservative Party has a pretty long, drawn-out process of choosing its leader, because that's what the Prime Minister is, the leader of the Conservative Party, the party that has, well, they don't have a majority in Parliament, but they have the coalition that forms a majority. And from what I read, it looks like the week of July 22nd. So we've got like over a month to wait. I guess she'll still be a caretaker prime minister until then. But officially she's resigning today. I think the guy who is probably the favorite is Boris Johnson, who's talking about, that he will leave without a deal by October 31st, if there isn't a deal. But I think things are not great. I think Parliament is going to make it hard for the UK to leave without a deal. So if we don't get a deal satisfactory to the next Prime Minister, whoever that is, I think this country is going to be in more and more political or constitutional trouble. Yeah, constitutional. I mean, even The Economist now is talking about this. This week's cover says, next blow, Britain's constitution, and it's all to do with Brexit. So let's keep an eye on the markets, see what happens after non-farm payrolls, and what happens to precious metals. I'm still convinced that precious metals are near a breakout. The key level still going to be 1375. That was the high back in the summer of 2016, July 4th to be exact. And those negative interest rates, don't be fooled by them. It's great that you get paid to borrow money, but don't forget about the principal that you're going to have to pay back. If you enjoyed this video, make sure you hit the like button, subscribe to the channel if you haven't yet. You can also follow me on Twitter, Steemit, and on DTube. So Billy and I say goodbye to everyone. Take care.